Okay, so now let me tell you about Herceptin. Herceptin is a drug that treats metastatic breast cancer and of a very specific type. In a minute, I'll play a little video clip that actually describes to you, exactly what Herceptin does. I don't want to try to explain it to you. I may botch it. But before I do that, let me tell you that, first of all, there is a book written about it. It's called HER2, and it's fascinating reading. But believe it or not, there's also a movie made about the development of Herceptin, specifically focusing on the UCLA researcher Dennis Slayman, who played an important role in getting this drug approved, to the point where at certain periods, Genentech cut off funding and did not want to support this anymore and had to be cajoled into doing it, and some fundraising from the philanthropic sector had to be done in order to raise money to keep it going. So I haven't seen the movie, but it stars Harry Connick Jr. So if you're interested in that, I urge you to take a look at it. But let me just see if I can play you this clip, and you can get a sense of why this drug, which affects about 25% of breast cancer patients, was really quite remarkable. By the way, I don't have any financial interest in Herceptin or Roche or Genentech. So that's the basic mechanism by which Herceptin works. And you can see that it's very complicated. There are lots of different moving parts to how it acts. And so you won't be surprised to learn that it took many years of basic science before we even got to the point where we could actually apply some of those scientific discoveries in the clinic. So here's a timeline that you can actually find on the Genentech website. They trace the lineage of Herceptin back to the 1970s, when the very idea that cancer is a genetic disease was developed by a number of scientists, including our very own Bob Weinberg here at the Whitehead Institute. Once it was clear that there was some kind of a genetic component to how cancer tumor cells grow, we can then start to look at those genes and be able to identify ways to interfere with that. And that's really what Herceptin is designed to do. You can think of it as a kind of a parking ticket. Those of you who've tried to find parking around here, you notice it becomes increasingly difficult. And it doesn't make it any easier when there are construction vehicles that park illegally. You'd like to be able to somehow get folks to tow them away. And so tumor cells are very much like those illegally parked cars. And you can think of Herceptin as a kind of a method to attach lots and lots of parking tickets to these tumor cells and allow them to be towed away. It was a different approach to dealing with cancer. And it started out with some basic science from 1975 all the way through the 1980s. So probably 10 to 15 years of basic science, and several Nobel Prizes were awarded to discoveries that ultimately led to the development of this drug. And then the clinical trials began in 1992, and a drug was approved in 1998, which is incredibly fast. Part of the reason it's fast is because this particular approach actually showed real efficacy. So the statistics vary depending on the nature of the population. There are people that have actually taken Herceptin along with other chemotherapies and radiation therapy, surgery, combination therapies that have been, quote, cured. That is, they're cancer-free for 8 years, 10 years, 20 years. But the problem is that we don't know who that's going to be. We don't know how it's going to work. So when you average over all of the various different patients, it seems like Herceptin, along with the current regimen now, adds about 2 years of extra life to a typical cancer patient for the 25% of the women that qualify, that have this particular gene. So that gives you the timeline. It basically took 15 years of preclinical work, and then it took about 8 years, or 6 years for the clinical trials. It got fast-track approval by the FDA, and in 1998, it got approved. So the question that I want to ask you is, what is it worth? Was this a good idea? If you did an NPV analysis in 1998, would you have decided to go ahead and launch the product? Now, you could say, well, really, you should be doing the analysis way before then, and that's true. But very often, we don't know all of the various different details of when a drug is going to be ready to launch. So I'm going to just use 1998 as an illustrative point in time. We're going to look forward from 1998 and ask the question, what are the revenues from this particular drug? I don't know what the costs are, so I can't tell you whether this in the end was a positive or negative NPV project. You can decide for yourself. My guess, if I had to guess, is that this has been a very, very positive NPV project, but you decide. So here are the numbers. First of all, the timeline. Got to start with the timeline. So we begin with the sequencing of the HER2 gene in 1981. Basic research, Herceptin was created in 1990. In 1992, the clinical trials got started. 1998 is when the FDA approved it. And starting in 1998, 1999, the drug began to sell. The first year sales, $200 million. And then it grew from there. Now, just to be clear about the timeline going forward, in 2014, the European patent expired. And the US patent is going to expire in 2019. And we're going to have to take that into account because obviously when a drug expires from patent protection, you're going to lose some market share through generics. So in order to analyze the question, was this a good investment, we actually have to ask, who are the investors? What are their objectives, constraints, and timelines? I'm not going to answer that today, but I want you to keep that in the back of your mind because that's part of the challenge with some of the funding issues for biomedicine. It's that there are lots of different stakeholders, not just shareholders, but stakeholders, and we're going to have to deal with that issue a little bit later on. For now, let's focus just on the idea about investing from the shareholder perspective and ask the question, what is the present value of all of the earnings? Now, the way that we would do this if we had all the data is we would look at the costs of development from 1981 to 1998. That was the period that all of these various different kinds of research activities and development was going on. And then the revenues are from 1999 to 2013. That's the period where both US and European patents held. From 2014 to 2019, the European patent has expired, but the US patent still exists. And post-2019, going forward, is the final piece of the puzzle. So we break up the NPV calculation into those distinct pieces. And if we were to do this for real, we would add lots of other factors, things like scientific risk, business risk, financing risk, and legal risk. All of those risks we're not going to talk about today because we haven't talked about risk yet, but we will deal with next week and the week after when we bring in this whole idea of real options and using simulation analysis. So here's the data that I obtained from the Roche annual reports for Herceptin. These are the earnings, and they're denominated in Swiss francs, so I had to convert them to US dollars, and so I used the average exchange rate from various different websites. You can get that. And from 1999, when the drug was first launched, all the way to 2015 when we actually have hard numbers. So these numbers are not estimates. These are actual realized sales figures for Herceptin. We're talking about a net present value in US dollars, assuming a cost of capital of, say, 10% at $19 billion as of 1998. $19 billion at a 10% cost of capital. Now, I don't know what the R&D costs were for that period of time prior to when the drug was approved. But you can do your own back of the envelope calculation to see what kind of numbers would have to be spent in order to make that not attractive. Now, I haven't actually talked about what happens after 2015. Things get more interesting. So after 2015, we have to make forecasts. And 2016, although the year is come and gone, we still don't have figures yet for the fourth quarter. It takes accountants some time to sift through all of the receipts and bills and things like that to add up the numbers. But we're on track with the forecast of about $6.6 billion for 2016. And for 2017, the forecast is about $6.9 billion, growth rate of about 3% a year, until we hit the expiration of the US patent, at which point we're going to assume that the sales decline by 20% every year thereon after. So I just did the discounting up until year 34, where we've got about $400 million in sales. And in a minute, I'll come back to the assumptions that we make, because we're going to have to adjust them and discuss them. But just looking at the projected revenues starting this year and looking forward, Herceptin is worth, at a 10% cost of capital, about $54.6 billion in NPV as of today. That's in addition to the billions that we saw on the previous slide. So is it a good investment? I would say so. Not to mention the hundreds of thousands of women whose lives have been affected by this drug. Not all of them have been saved, but a number of them have. In fact, there's one thing that we're not taking into account here with that 20% decline, and something that nobody had anticipated back in 1998. And what that fact is that combination therapies have actually breathed new life into Herceptin. If you had calculated what the peak sales would be of Herceptin back in 1998, you would not have forecasted the fact that it has such staying power. And part of the reason that it does is because just a couple of years ago, Genentech got a new drug approved called Perjeta, which is another monoclonal antibody therapy, which targets a somewhat different mechanism, but used in combination with Herceptin, it actually works even better than either of the drugs alone. So now, of course, people want both, and that gives new life to Herceptin. And now if you also add chemotherapy, like paclitaxel, it's a kind of a chemical poison that basically prevents cells from dividing, it works even better than that. And that's a generic drug, but when you use all three together, it seems like it works even better. All of those things affect these numbers. And it's very difficult to anticipate, which is one of the reasons why when you make these sales forecasts, you got to take it with a pound of salt. There's a lot of misestimation here, and I'll show you a couple of slides from now articles that have been written railing against the fact that it's really hard to forecast these things. You know, it may be hard to forecast, but I got to tell you something, and this is part of the cultural divide between finance and science. The scientists think that it's really crazy to base decisions on these horribly noisy forecasts. But for financial analysts, this is the life we lead. It doesn't mean you can't take risks. It doesn't mean investors won't take risks. But it does mean that you got to take these sales forecasts with a great deal of skepticism, because we can't see in the future what kinds of therapies will work really well and really poorly. It may turn out that 2 years from now, Herceptin has a really bad adverse reaction to certain women. There is some kind of cardiomyopathy. There's heart issues that come with some patients. So we may find that there's some really serious problems with it, in which case these sales forecasts go out the window. So take them with a grain of salt, but nevertheless, we need to make a decision. And if you look at these numbers on the face of it, and given what it costs to do the R&D, it just seems like a home run. And that's not true with all drugs, but with oncology, for a variety of reasons, it does tend to be true. There are tremendous room for error in oncology because the market is so profitable. Now, I'm not saying that is a good thing or a bad thing. It is a financial thing. And we have to think about that carefully when we analyze these various different opportunities. I can make arguments both for and against these kinds of incentives, but the fact is they're there right now. So does the upfront investment justify the potential profits? Well, it certainly seems like it does over a wide range of costs of capital. I use 10% because that seems to be what the industry standard is, but that's not necessarily the right number. If you go back and look at what the value is, if I used a 40% cost of capital, which is an insane number, that's really, really high. Biotech companies typically use 20 or 30%. Investors use that as a hurdle rate. 40%, nobody realistically expects that to be a reasonable threshold. But if you did use 40% as a discount rate, you're talking about $17 billion from 2017 going forward, which is still a pretty amazing profit, I have to say. So what is the appropriate cost of capital? That's what we're going to talk about for the next two classes. We're going to have to spend some time thinking about risk and return. But certainly, when you look at the range of costs of capital, and for biotech and pharma, some blend of between 10 and 20%. So maybe 15% might be the right number to use in this case, because Genentech is sort of an in-between company, but now, of course, they're Roche, so they are a big pharma company. Probably 11 or 12% is a better number to use for cost of capital, because that takes into account bird pie inflation as opposed to standard kinds of inflation measures.